Welcome to the Cryptosphere. This is Cryptogenic coming at you. Today is Monday, December 12th at 5:42 p.m. here in Northern California. We're going to do a quick market update. Today we're going to look at Bitcoin, just the weekly chart, the daily chart, the 4-hour chart, and the 30-minute chart. So we're going to start with this kind of macro perspective. Then we're just going to zoom in and in and in and in. Here's the interesting thing that I want us to look at today. What we discover is that you're looking at completely different candle patterns when you look at completely different time frames. But those patterns, when you put them together, they tell you a story about where the asset is going. So we're going to jump into that, and this is going to tell us a story of where Bitcoin is going in the near future. Before we jump into the video, please do me a favor and take a moment to hit the like button and subscribe to this channel. Like this video, subscribe to this channel, and drop me a comment to let me know that you're listening, that you're watching. I'd love to hear any ideas that you have for future videos that I can make, but I plan to put out a bunch more market updates in the days to come. Also, pick up a free copy of my 4 documents, Intro to Investing, Intro to Crypto, Market Update for 2023, and Intro to Leverage Trading at abouttheb.com/4 free. That's right there in the description below. Thanks. All right, let's jump right in here. As we jump in, we're going to start with let's start with the weekly chart. We're going to start with this kind of broad macro perspective that goes really all the way back here to 2021, early 2021, when we entered into this descending narrowing wedge. So on the weekly, we're in a descending narrowing wedge, both in the price and in the RSI. Quickly on the daily, the price is in the price is in a symmetrical triangle. Right? So the price is in a symmetrical triangle, but the RSI is in an ascending channel, right? Okay, now if we look at the 4-hour, we've broken down bearish out of an ascending narrowing wedge. So you see this? You got a descending narrowing wedge on the weekly. You got a symmetrical triangle on the daily. You got an ascending narrowing wedge on the 4-hour. And then you've got a descending broadening wedge on the 30-minute. Why different candle patterns? Because where Bitcoin is going in the next 30 minutes or in the next few hours, let's say 30 hours, if we can kind of 10x the time frame here, where it's going in the next 30 hours is different than where it's going in the next 160 hours if we 10x the 4-hour chart. And where it's going in the next 160 hours is different than where it's going in the next 10 days. And where it's going in the next 10 days is different than where it's going in the next 10 weeks. And so extrapolating these things forward, we could see that this is a very inherently bearish pattern that turns bullish. Whereas, on the other hand, let's say the ascending narrowing wedge is the opposite of a descending narrowing wedge. This is going to break bullish. This is going to break bearish. And we see that we've already broken bearish. And then this, what does a descending broadening wedge do? Well, a descending broadening wedge, well, what it does is 51% of the time breaks bullish. 51% of the time. Well, that is, if it comes up and tests the top of the wedge, 51% of the time at the end it breaks bullish. 48% of the time it gets rejected and comes down. And every time it hits the bottom of the wedge, 45% of the time it breaks bullish, but 54% of the time it breaks bearish, which means it has a little bit more of a bearish bias, okay? So we've gotten rejected here at the top of the wedge, and so the odds are we're coming down to test the bottom of the wedge again. And if we took a bars pattern here, we can kind of get a picture of what that could look like, and it could look like something like this. And so we'd come down and test the wedge at somewhere around 16,800. I think it's going to probably be a little bit further down than that. The reason is when I look at data from the 4-hour chart, what I see is we hit the top of the RSI over here on November 30th, and we made a lower high while simultaneously we made a higher high in the price. So remember, ascending narrowing wedge, bearish divergence in the RSI, it's almost always going to break down. This is a high percentage setup. Well, we really only made one higher high in the price before the price started to follow the RSI and is now in a downtrend. And really what we can see actually is we're making another wedge here in this downtrend. And if we extrapolate it out, we could stay in this wedge until 16th or 17th of December. But I'm anticipating a breakdown at some point and a revisitation at least of this line of support here at 16,549. At that point, it will make a decision. Is it going to break out or is it going to break down and test the next level and the next level? And I think really the market is kind of in a holding pattern to figure out what the Fed is going to do and how the market is going to react to that. So we're going to watch it and see. But looking at the daily pattern, we're either going to break bullish out of here or we're going to get rejected and come down and test the bottom of this symmetrical wedge. Now, if we test the bottom of the symmetrical wedge, where does that put us? Right around the same place, around 16,500. So what we're seeing is multiple data points that are leading us to the same conclusion, that the level of support is somewhere around 16,500. And then if we go over here to the weekly chart, this macro picture, the support and resistance, the support is higher and the resistance is lower. This line of support, line of resistance here, we're still a couple of weeks away, 3 weeks away from even testing it. And then this one here. So we'd have to break above this one, then we'd have to break above this one, then we'd have to break above this one. If we break above this line of resistance, come back down, test it, and bounce, then I'll say the next bull run has happened, or the next bull run has begun. That's kind of the official confirmation that the next bull run has begun. But in the meantime, as I stated in my market outlook for 2023 document, which you could get for free at aboutthebee.com/for-free, there's a link in the description below. I think we're going to be in this holding pattern moving sideways for about 3 to 6 months with a potential drop down to around 13,400 or a little below sometime in that time frame, which may or may not happen. As you know, I'm not a financial advisor. I'm just looking at charts and giving you my perspectives and my opinion. That's my perspective and my opinion. Definitely not a promise. So please make your own decisions based upon your own research. All right, folks, thanks so much for watching today. I appreciate it very much. Remember to hit that like button and leave me a comment and let me know. By the way, check out my Patreon. It's an awesome community and a place to connect, a place to get information. I'm charting the 20 assets in the cryptogenic portfolio there on a weekly basis. I do a weekly Zoom call for all gold members. I answer questions. Next year, I'm adding technical assistance for individuals who need help setting up certain platforms. And it's just a great community of learning, of inspiration, of creativity, and of encouragement. So I'd encourage you to check that out at patreon.com/cryptogenic. All right, folks, above all, remember to make it your aim to sleep in peace every night, wake in joy every morning, and walk in love every day. This is Cryptogenic, signing out.